Hi, everybody. My name is Ian Hawkins. I'm the head of content here at Swoop. I am delighted to welcome you to our webinar, Make Cash Flow Work For You. Swoop's experts share essential tools that will immediately make your business stronger. Let's do some housekeeping before we get underway. So first of all, we really welcome questions today, but please put them in the Q&A box. If you put them in regular chat, they're very likely to be missed, so Q&A is where they need to be. If you have a question, we really want to answer it, so use the Q&A box, please. The chat box is where you can drop us a message if you're having any technical difficulties whatsoever, and my colleagues are sitting quietly in the background. So if you have any problems at all, they will leap into action and make sure that we here are audible and visible once again ASAP. My experience of Zoom is that if you come out of the meeting and go back in again, that almost always solves all of your problems. In any case, this meeting will be recorded and posted up on swoopfunding.com. If you want to watch again or recommend us to a friend or colleague, that's where we will be. So I'd like to introduce our guest today. First of all, we have our special guest, Justina I knew there's too many tall letters in this. Justina Totilate, CEO at Adsum. Hello, Justina. How are you doing?
Well, thank you very much. Yeah,
good. Thank you. We also have Kieran Burke, co-founder at Swoop, and Andy Stringfellow, the head of invoice finance at Swoop as well. So hello, gents, to you.
Hey.
We were talking right before this webinar started about what keeps our customers up at night. And at Adsum and Swoop, we both realized that we had these little spikes of people on the website at the same time, like 2 or 3 o'clock in the morning. So as we talk about the issues that keep people up awake at night, cash flow might be one of them. So Justina, welcome to the Swoopiverse. Are you seeing more businesses struggle with cash flow right now?
Well, thank you, Andy, Kieran, and Ian for having me, and thank you for the audience for making time just after your lunch for joining us all. Yes, we are. And I think what we're seeing is also now people are not only acknowledging that the economy is slowing down, the interest rates are higher, therefore funds are more scarce. And what we are seeing is that regardless of the size of the company, so from your sole traders to your limited companies to medium-sized companies as well as listed companies, people are a lot more proactive and take actions in order to address their cash position, acknowledging that the equity investment, which otherwise would have patched up that hole, or the growth, good organic growth, will be harder to come by. So what we are seeing is people acknowledging that, facing, that challenge, and forward-looking directors truly and really looking for faster ways, working with better suppliers and looking how to solve it.
Kieran, is that the similar story for Swoop customers, do you think?
Yeah. So I suppose it's a bit of a mixed bag depending on where you're coming from, because you may have come from a couple of years ago where you were looking for finance for the first time, and it was a very different interest rate market compared to what it is today. So you probably got a pretty nasty shock to say the rates that you were expecting were completely different. However, you might be coming in from the first time because, as Justina alluded to, your organic growth isn't quite what you expected, or you were expecting kind of equity investment to land. So now you're going to have to look at working capital for the first time. So I think, first of all, just understanding someone's financial position is super important, and then getting into the cash flow of the day-to-day of the business. And then you can kind of start to look at all the different instruments, because whether it was 2 years ago or today, the good news is there's lots of optionality out there. That's kind of why Swoop exists, so that we can help unpick all the different options that you're eligible for and find out what the right solution is. So that's why cash flow is super important. Yes, the base rate isn't going to be as good as it once was, but there's plenty of the products on the market that are able to look at things over longer periods or longer term periods. So what does the impact mean to me on a monthly basis could be quite similar to what it was a couple of years ago. So it's important to understand your ins and outs. But good news is, from a Swoop perspective, there's still plenty of options there and levers to look at from a working capital perspective.
Sure. There's things like inflation as well, and the cost of everything's going up. Brexit's causing, dare we say, a few more problems.
Yeah. Well, certainly with things like Brexit, you often have like volatility when it comes to trading relations or FX or currency swings. So sometimes potentially it's not always looking at, say, the funding aspect of things, but you might want to understand how you manage your cash flow from a foreign exchange management. So one of the things that we've been encouraging business owners, particularly when looking at managing costs, is having a surety around if they're managing multiple currencies, are they locking in rates that they're comfortable to trade with? So the kind of overarching concept is hedging, but for business owners that don't understand what hedging is, it's essentially saying, if we take it as an example of I'm in UK and I buy a house in France, and I bought the house for €1 million, which let's say is £850,000 as of today, but I'm not sending the cash for another 6 months. There's a high chance that the currency is gonna swing and change dramatically in that period. So what hedging would allow me to do is lock in a specific rate in which I'm comfortable exchanging my money with. So taking that into a business context, it's super important for those business owners that are impacted by import export or any kind of Brexit style implications to start thinking about how they manage their currencies, and particularly not using their high street bank, because that's where you're going to incur the most expensive charges, particularly if you don't have a one-to-one relationship with your bank manager. It means you're probably not that valuable a customer. So therefore, don't be using your own bank to do anything relating to FX. So starting to think a bit more laterally about how you move money in and out of your bank account, even before you consider anything to do with working capital.
Brilliant. Thank you, Kieran. Andy, welcome aboard. You're fairly new to Swoop. So question for you is, how have businesses traditionally managed their cash flow?
Hi, yes, it's great for being in Swoop. I mean, traditionally businesses have used their own funding, maybe borrowed from family or friends. So you're tying up your own cash there, or your own resources. Historically, in terms of external borrowing, bank overdraft, one-size-fits-all overdraft. So back in the day, regardless of the purpose, that you needed funds for, go to the bank. Typically, for any kind of level of funding, the bank would be looking for what they refer to as tangible security, which invariably means a second charge over your home, which obviously is not great if things start to go in the wrong direction. Other options have been maybe trying to persuade suppliers to give you extended terms, but there's probably an impact there on either your relationship with them or maybe the pricing that they're giving in the first place, or possibly going to customers offering discounts for early settlements. But again, you're eating into your profit margin there. So really, none of those options are ideal in today's environment.
Yeah. What about when businesses come unstuck? How does that happen? How does the business run out of money?
Well, I mean, Kieran mentioned sort of hedging there specifically in relation to things like FX and so on, but you could extend that principle to it's rainy day money, it's planning ahead, having sufficient cash flow resources available within the business so that if something unexpected arises, rather than maybe, oh, I'll pay that supplier then because I know that customer will pay me on this day because I trust them and I've dealt with them for years. But in truth, that's outside your control. Your customers could have something unexpected that happens in terms of their cash flow. They can't pay when they originally said they would. And if you've based your whole payments out to suppliers, or even, God forbid, wages or HMRC payments, all of a sudden you've got an issue there. And if there's no resources to fall back on, business has got a problem.
So it's not just a question of mismanagement. There's all kinds of other reasons why a business might go, we don't have quite as much of the tank as we thought.
Increasingly in this day and age, there's so many things that are outside your control as a business owner that can impact on your cash flow. Absolutely.
Okay, well, Justina, Adsum is partnering with Swoop at the moment to offer instant VAT refunds. Just talk us through. This is one of those products that's got everybody in the office really quite excited. So tell us how it works and where the idea came from.
Well, thank you for being very complimentary for for calling taxes very exciting, but really what Andy has mentioned, businesses can face short-term crunch for example, unforeseen circumstances being, let's say, HMRC refund not arriving, for numerous of days, even months. For no one's fault, but it's just the processing error, people on holiday, or simply things taking a little bit longer than before. So what we've done, we've developed this solution that is a very simply allowing people to get their tax refunds instantly, and it works in a very very easy 3 steps. So step number 1, delighted to be partnering with Swoop, great company, great team, and definitely, best in class platform that the customers use. So you can sign up within, 4 minutes. If you're slow, if you're fast, probably within 2. So sign it up. And what we do, we basically, although we provide funds, we are not a lender. We purchase your tax receivables. Means the process is really, really simple. So 4 minutes to sign up. And then you you do your thing as you do. At 2 o'clock in the morning, you submit your VAT refund using, software providers such as QuickBooks, really good software provider, or like ClearBooks, really targeted to the smaller parts of business, or even the good old Excel combined with, your MTD provider such as, GoFile. And at that point, on submission, Adson will advance you your VAT refund, and it means that you as a business owner will be assured of receiving that cash and, let's say, making the payments to your staff, as Andy mentioned a little bit earlier. And last step, but not least, from that point, you do nothing each time when you submit your VAT refund and there is money to come to you from HMRC. You will have certainty that it will be in your bank account within 60 minutes, as opposite to 6 days on the very earlier side to up to 6 months on the latest one. So that's the innovation that we're offering to all businesses in the UK, including the sole traders.
Brilliant. So it's not necessarily a question of when people worry about their cash flow, it's not so much as how much money we've got as how quickly can we get it in, and Adson really sort of solves that particular problem. If you're waiting for that refund,
yeah,
it's just presses the button on it. Fabulous. Thanks very much indeed, Justina. Andy, what about invoice financing? This is the other way that people can get money in more quickly than they're expecting. What are the advantages of something like invoice financing?
The great news about invoice financing is that the marketplace, there's so much more variety than there has ever been in terms of funders out there, the types of facilities they can provide, ranging from what I would call the traditional invoice finance, which for a business that's selling on a B2B basis on credit terms, funding the whole book, right the way through to funders who will fund maybe just one customer or even a single invoice if you've got a really short-term requirement. But it's all about, for me, really matching your requirements to the sort of funding you've got available. So for working capital, the ebbs and flows that inevitably come with it, invoice finance can really help to achieve your goals, the growth of the business, but also, we talked about this before we came on the webinar, of course, about being able to sleep at night. Saves time and stress for directors of owners of businesses, and also those directors go into business. They've got goals they want to achieve both in terms of the business and their life and looking after their family, etc. What they want to get out of it. So invoice finance can help with all those personal goals as well.
Brilliant. Kieran, what other tips have you got for a business that needs cash fast?
Yeah. I suppose starting point, find out your cash flow forecast to see what your cash gap is. We have a free tool on the platform if you plug in your accountancy software, or there's another tool we'd recommend using called Futurely if you want to check out. But definitely plug Adson solution again. If you have a VAT or a payment due, from HMRC, there's nothing quicker than 60 minutes cash in your bank. So that's definitely a rapid one to look at. I think understanding where are the bits that can unlock cash within your business is super important. So one way to looking at it is your kind of cash flow. So do you use an online processor like Shopify or Stripe, or a physical card machine, SumUp or something like that? You can use the data that you're gathering there from the monthly recurring revenue, and you can get facilities off the back. Having that question over purchase over lease. If a business, are you making any capital expenditure in terms of any heavy duty machinery or vehicles? Should you look to lease that instead of purchase it, so that you're not paying all that cash up front, or in fact get financing for it? This is particularly of reference to UK customers, where you've got a £1 million capital allowance that you can use throughout the financial year. Also super relevant because SMEs are seeing their corporate tax rate go from 19 to 25%. If you want to keep it at 19%, you need to make sure your profits don't go above 50 grand. A good way to keep the profits near the 50 grand is make sure you use your £1 million on capital allowances. So that's a good way to look at getting cash in quickly. As Andy said, you don't always have to look at all your invoices. There might be one particular selective invoice that you're waiting outstanding. You can raise capital on that. And also there's flipping it on its head. It's not always about getting cash in the door, it's how you stop cash going out the door. So if you're looking at how you are spending money, can you make sure that you're giving your suppliers payments over a monthly period as opposed to a quarterly period, or even a yearly period? We've gone through a period where actually energy prices are coming down again. So therefore, when your energy bill is coming up for renewal, make the most to make the most out of the negotiation, because as we've talked about many of these webinars before, as a business owner, every business owner has to negotiate individually their own business energy contract. So negotiation is rife there. So to use the opportunity of the lower energy prices right now to get the value of your contract down. Similarly, insurance prices have also gone down relative to where they were a year prior. So again, any annualized business insurance contracts is a good one. My favorite one at the moment is salary sacrifice. So salary sacrifice is when you're looking to put a pension scheme in place for your business. As a business owner, you have to put a pension scheme in place. I would strongly encourage any business owner to look at salary sacrifice, because you ultimately get to give every single employee a 1.4% pay rise, and you get to save 1.4% on every single employee in turn without doing absolutely anything. So it's a no-brainer, particularly for those businesses that maybe have more than 10, 20 employees. So yeah, lots to be done, either if you're trying to get cash in or plug cash going out.
Justina, did that news make you punch the air? It looked like
yes, because I was like, yes, I could and must do this too now.
Yes.
Because I'm also a business owner, actually, like everyone else, thinking, cash is king now, and also I could do a lot with that. So yes, I will definitely be doing the tips that
I'm glad you're saying cash is king. I've heard cash is king so much from Kieran and Andrea. And now if I say it, I catch myself doing it in a slight Irish accent because I've heard it so often. Quick reminder to our audience that we are open for questions. If you have anything, we've got a couple in there at the moment. So please do use the Q&A box if you have any questions. Last question, I'm just going to run along the whole panel on this one, because we always talk about the value of blended funding. So as we've got a couple of product specific experts in the room, I'd like to know what's the best combination of blended funding that you've seen. So it will be, with Andy, it will be invoice financing plus. What have you seen, Andy?
Often if someone's looking to acquire a business, whether it's the existing management team looking to buy a ownership, or someone parachuting in and buying a business, invoice finance together with maybe some kind of term debt to allow them to take over that ownership of that business and really look to drive it forward.
Okay, Justina, what about you? What's your favourite blended funding approach? VAT refund plus?
I think I would probably talk along the lines of what Kieran mentioned earlier, looking at probably holistically at how can I get more cash in the business at a cheapest cost. So optimizing his effects, I think these small things really add up. Looking for business grants that you might be eligible because, there may still be some money at a very, very attractive rates. If you can get your, grant from the regional, authority that you might be around, your R&D credits, anything that sort of, related to the government subsidized funding, I think could get you all in a cheaper rate. If you can really be proactive, optimize your pension, be smart about your effects, negotiate. I think that would be probably a good blended rate to really be proactive, which I think hopefully the fact that you guys logged into this podcast, on a Tuesday at lunchtime, I think you're on the right track. So that would be my advice. Look for cheaper government money as well as to mix your vote into the mix.
Kieran, Justina has just stolen all the best ones there. So what do we have? we talked about FX, grants, R&D tax credits.
Yeah, I think it's just echoing some of what Justina said there. I think grants is really, really important. Sometimes people are put off it because it can seem very overwhelming. And is it relevant to me? That's kind of why we created the tool that we did. So just quickly sense check your eligibility. You might as well check to see if you're in the game, because if you're in the game, it is going to be the best form of blended finance because it's going to be the cheapest form of finance, particularly again, where you're in non-London regions. The best grants are always outside of London. So if you are in areas outside of London, check with what your local growth hub or your LEP is offering, particularly around kind of capital expenditure. Often if you're in, say, agricultural industries, you can get good offerings in terms of contributions to big equipment purchases. And so always strongly encourage that. Justina hit a nail on the head, but a really, really good one is the research and development tax credit system. It's a fantastic scheme. So if you are investing in any new technology or new processes, you must be making sure that you put your R&D tax credit in. But if you are in a cash crunch and you put the credit in, there are plenty of people out there who will be able to fund that R&D tax credit facility while you wait. Increasingly, also there's other components you can put in your R&D tax claim where you couldn't in the past. So one big expenditure for a lot of technology-based businesses is spending on your databases. So your Azure, your Amazon Web Services, or your Google Cloud platforms. And now you can put 100% of that expenditure back into your R&D claim. So making sure you're taking advantage of all of these things. But I think going back to the question of being blended, I think the best blended form of financing is when you combine different sources with like grant with debt. So you're getting the best of both worlds.
Okay, thanks very much indeed, Kieran. So we're going to go to our audience questions. We've got a few up here now. If you want to use the Q&A box, please do make use of it. So let's kick off straight away. From an anonymous attendee, how do you reduce small business expenditure? Who am I going to ask on that? Kieran, as you're straight in front of me, I shall come to you.
So yeah, I think very simply put, what are the things that you are expending on as a business? It might be really small micro ones. Something that we noticed pretty early on was like banking was weirdly expensive for a lot of small businesses because, again, they were using one of the big four to do a lot of their banking needs, and they were getting ripped off even from sending transfers, doing payments. Actually, you're way better off using a Starling, a Revolut, a Monzo, a Challenger Bank for all your day-to-day banking needs. You save a huge amount on the day-to-day costs. And then in particular, if you're ever using a bank to make transfers outside of the UK, always looking either at Challenger banks or FX houses to be able to do that. Other areas in terms of cost bases, as I said, are going to be like often salaries are going to be very, very expenditure or going to make up the largest share. So one thought that I just mentioned there, if you do have a large pool of employees in there, you can look at something like salary sacrifice, which should provide about 1.4% per employee saving as a way to kind of reduce cost and expenditure. We were chatting about offices before we came on this call. Having gone through the whole COVID experience, the way we use and utilize offices is completely different to how we did it before COVID. So what does that look like as an expenditure in the business? Because there's a lot of variability from a cost base in which you can use office space going forward. So it's something that I would think about if I was looking to analyze it as a cost category. Marketing is often a big cost base for businesses. So it's really important for you as a business owner to then understand the simplistic side of things of how much are you getting back on every marketing pound that you're spending. And if you can't answer that clearly, then I just stopped doing marketing until I was able to answer that clearly, because there's no point in having that expenditure unless you know what's coming in the other side. So yeah, step one would be I just categorize all the different costs and then think through what are the potential ways in which I could change them, but just threw a few out there that might be get the ball rolling.
Well, I'll throw that to Justine as perhaps answering as a business owner as much as anything else. What have you found that has been a good way to reduce your expenditure?
So actually, my co-founder is great at this. He has this foolproof way. At the end of every month, when we have things to pay, he sorts them out in the ascending order and looks at the top 3 largest invoices. And I know that he randomly cancels direct debits and see if there is any shouting coming around, or
that's a really good one. Oh, we've done that one. That's a great one, by the way. That's a great one.
Funny story, because sometimes the other businesses charge your business bank account, the card, some sort of subscriptions that you have no idea what it's for, and it's £100 there, $100 there, and it all adds up. So if you rank it cancel, then 2 things will happen. Well, number 1, you'll definitely save yourself money. Number 2, you also may not have a phone anymore because you probably, cancel your landline subscription or something. That happened to us, not a joke. And it took us a while to understand because it was quiet. So that would be my tip. Rank your subscriptions, direct debits, cancel most of it, and see what happens.
As well as the things at the top, it's also worth looking at the things at the bottom of the list as well, because those all add up. I got my nephew to do work experience with me for a week, and the first thing I asked him to do on a Monday was try and find me a better deal on my phone, and he saved me £600 a year.
Yep,
which is not bad for a teenager looking for something to do. Andy, what about you? Anything else that people can do to reduce small business expenditure?
Anything kind of manufacturing, engineering, those types of businesses. We've all seen, energy prices are starting to come back down again, as Kieran mentioned, but input prices have been going up for months, probably over 12 months now. Is it possible to buy ahead? I guess that would be a form of hedging. You could argue if you've got the cash flow available and you can fix prices with suppliers in advance, maybe even with scheduled deliveries. If you don't have enough storage space, but at least that way you're kind of insulating yourself against future price rises.
Awesome. Thanks very much indeed. We've got a question from Anupama here, who said we've already submitted our VAT and it's been 3 months since we're waiting for the VAT refunds. Is there a solution to this? Justina, is there any way of getting that speeded up, or is it too late? They've just got to wait for it now.
Yes, there is a way to speed it up, and I assume, I do not know the story, but I assume one of 2 things have happened. A, it might be your first VAT refund, or B, it might be a refund that is in a sectors which HMRC are very hot on, the food, the import exports, the fast moving consumer goods, or simply it's larger than before, or random checks that HMRC is doing as part of their mandate. So 2 things, either your first VAT refund or something that has triggered their compliance would be my sort of guesses that should cover around 90% of the outcomes. So exactly, good. At least I got one right. I hope I'll get the second one right as well. So now, how long is going to take? Cover your ears. It can take up to 12 months because they will want things to be sent to them in order to release the funds. What can be done about it? It depends if option A, your accountant has prepared it, or option B, the business owner prepared it. With both options, we can work by helping you to deal with HMRC and answer the compliance questions that you have likely received by letter. And as a special offer for Swoop's customers only, we do a promotion for £99 a month only, where we will help your VAT recovery. And that also means that you'll become VAT refunds eligible for your future refunds as soon as we deal with this one. Likely can be done within a couple of weeks if the paperwork is ready and we can communicate with them electronically, which we are tax agent, therefore we should be able to help you with that. And yeah, special deal for Swoop's customers. So either speak to your relationship manager through Swoop, and then we'll be happy to connect.
Brilliant. Thank you very much indeed. Okay, question here from Joe Ralph. How long do you need to predict cash flow as a startup for investors? Internally, I'm thinking, is it 4 quarters? So that's Joe's question. Kieran.
I can do it. Yeah. Hey Joe. So I would say 4 quarters a year is a good way of thinking it. I don't know how the startup business is, but if it's brand new, it is pretty hard to look any further out than 12 months because you're at a time period where it's highly volatile and varied. What often investors will look at and what we often do with, say, our board or any investors we have is a financial model that's tracking around a 36-month period. But from a cash flow perspective, you really are looking at that 12-month cycle, because what they'll want to be tracking from an investment standpoint is your monthly cash burn, and what the trend analysis is on that average monthly cash burn. Is that going as predicted? Because often your predictions are that you are, if it's an equity-based business, going to burn cash over that period. So as long as the trend is as you set it out, naturally there'll be different variants depending on what your business model is. So I don't know, your business model might be in pharma or life sciences, and you have to see through clinical trials from animal to human. Therefore, I need to see a cash flow model that's a lot longer than 4 quarters. But if it's a B2C style model, then I think 4 quarters is perfectly acceptable from an investment point of view. So hopefully that's useful.
Great, thanks very much, Kieran. Another question here from Dr. Jill Rose Jacobs. Does Swoop cover match funding for smart grants, and if so,
yes.
how? Yeah.
Yes, we do, and we've a good few case studies of it as well. So in terms of how that works, Dr. Jill, is essentially once you've got that letter from Innovate UK. So when you win a smart grant, you get a letter acknowledging, obviously, that you've been awarded the smart grant and what the process is going to be in terms of the attribution of that the cash in the project. And that is essentially the collateral that the funder will then use to match fund the funding that's been awarded from the Innovate UK Smart Grants competition.
Because that's the thing about grants, it's always, well, it's not always, it's often paid afterwards. You don't get the cash up front.
Yeah, and with that one in particular, the smart grants one, it's with a lot of Innovate UK ones. It's project related, so there's different phases to how you're setting out that project. So that in that way, that there can be installments, which is why the match funding can be quite additive, because that doesn't need to correlate exactly with those installments. So there, from a working capital expenditure point of view, you can really get going on the project and put that cash to work, whilst also factoring in when you're going to receive those other payments from Innovate UK.
Okay. We have a question here about somebody having trouble getting hold of somebody at Swoop. I guess Alice, we will tell you what the best thing to do, Alice, is to make sure that you've.
Well, I will personally say that.
Kieran will get hold of you. Alice, if you could drop your email address into the Q&A box.
I will give
Kieran
you a
will
call
give
straight
it
after
straight back to you. See, that's why you come on a webinar, because you just make stuff happen. So
I
Jack would like
apologize, Alice, as well.
yeah, something's gone awry. But okay,
Yeah.
Jack Crawley would like to know, would Swoop Funder consider creating a specific service to help creatives secure angel investment via social media or their portfolios? That might be one for our equity team would like to explore.
Would Swoop Funding consider creating a specific service to help creatives secure angel investments by social media, their portfolios, and recording artists and producer looking to secure funding? Would like to explore this with Kieran. It is like what we're always trying to do within the equity team at Swoop, Jack, is to try and, I suppose, democratize the equity investment cycle, because similarly what I was alluding to on the grant side of things, often equity investment can be in clusters, where that's geographic around things like London, or in segments where B2B SaaS is the buzzword of the day, and that's where a lot of the investment dollars or pounds are going into. So one of our missions is always trying to unearth different funds or angel networks or investors that are interested in looking at all opportunities. The thing that, again, would warmly welcome a conversation or follow-up, Jack, is to hear how you're thinking about it from a social media portfolio point of view, because when I think about your proposition, it doesn't go too far off Indiegogo or Kickstarter or things like that, whereby lots of creatives, whether they're looking to put on productions or launch careers or products, have used those channels in the past in order to gather a crowd to build up the investment side of things. So you'd be curious to see how you're thinking about that a little bit differently. Certainly from Swoop side, what we try and do is try and engage that equity audiences on as broad a network as possible, to try and ensure that we have a healthy mix of investors there. But my previous thought process for a recording artist or producer would always kind of navigate towards the kind of Indiegogo style model. So be curious to hear what your thoughts are in that area.
Brilliant. Jack, I guess if you pop your email address in there, I will do exactly what I've done with Alice's, and I will pop it on Kieran's Slack channel. If you check your notifications to Kieran, that Alice's email address is right there. There's no escape
Super.
now. Fab, we are out of questions, so I'm going to give you a couple of moments. Just if anybody else has a question, you can certainly drop it in. Otherwise, I think we'll wrap up there. So thanks very much indeed. We're going to share access to this recording shortly. If you want to share this recording, we love it when people share it. So just quickly run down the line and say thanks very much to everybody here today. Our special guest, Justina Tartelate. We have a new joiner, Andy Stringfellow. And we also have our co-founder, Kieran Burke, as well. So thanks very much indeed for joining us today. Thanks very much indeed to you and your questions. Jill, I have sent your email to Kieran, and I've got Jack's email here as well. So I shall pass that on to everybody that needs to see it. There. It's in the Slack channel now. So thanks very much indeed for your time and attention this afternoon, everybody. Thanks very much indeed to the guests, and I hope you have a lovely rest of the day wherever you are. Take care. Bye-bye.